Good morning, everybody. I'm Eloise Boshoff from Seeff, North Coast. I'm a real estate agent in the North Coast area, and I specialize in Belito. Today, we're going to talk to a bond originator, and why I'm doing this video is I think people don't always understand what they do and how they can help you. So I want to introduce to you Cindy from ooba. Welcome.
Thank you. Thank you for the opportunity, Eloise. Really appreciate it.
It's a pleasure. So we're going to jump into it and start the questions.
Let's do it.
Tell me a little bit more about you and how you fit into the real estate business.
Okay, so basically I'm a service provider. So the whole aim of bond originators is obviously to make the work of the new consumer a lot easier. So I'm contracted, we got shareholders with the real estate agencies like Seeff, like yourself, and then we contracted to the banks. So we basically like a service outsourced from all the banks where we then shop around for the best deal for the consumer. It's absolutely free and it's really a home loan comparable service where they are guaranteed the best rate. So it's basically brokers. We have great connections with the banks. We've got great regional managers that assist us with our deals. So it's a lot easier for us to handle the process because we know what all the banks require, the documents they need. So we put everything together to try and get the client the absolute best deal up front. And as you see, as you ask more questions, there's a lot of tools and added benefits that we actually have. So we are a service provider, no charge to the consumer, and it's absolutely to give them the home ownership experience and make their lives easier.
Great, yeah, it sounds like how mouthful that one, I must be honest. Okay, how long have you worked in the industry and how long have you been in Belito?
So I've been in Belito for 3 years, so very, very blessed. I've been in bond origination for about 15 years, and I've even tried being a real estate agent, so I know your side of the fence as well. I know the challenges and the hard work that goes into it. So I sort of have a better overview, including the experience. And then again, I'm also very passionate to get the client the best deal. So yeah, so I've had quite a number of years of experience and have great business partners to make the experience even better for your clients.
Okay, that's great. Yes. Okay, next question I want is what is one of your favorite things to do in Belito? Because I want you to, obviously you moved to Belito for a reason, but what is your favorite thing to do in Belito?
So obviously it's the beach life. We absolutely love hanging out to the beach. We love being just part of the community here. I absolutely love just the culture around Belito and love the marketplace, just love the experiences and the vibe that Belito has to offer. But as a family person, we absolutely love spending time on the beach. So obviously in this time, it's been very challenging because, you know, Belito has so much beautiful viewings and we've just not been able to get there. So any day on the promenade for a good walk, just to have a view of the sea is just a breeze. Absolutely love that.
Yeah, no, we all have a little bit of challenges this lockdown. I think we're all craving a day on the beach. I wish I just said I want to just go a day that I can just go, even if the water's ice cold, I just want to jump into the ocean and have a good swim. And I'll feel like a new person.
It's because it's so therapeutic, you know, and it's, you know, and Belito really has such incredible beaches. We've got such amazing scenery, and just to not be around it and being able to absorb it has been very, very frustrating for my entire household, quite honestly.
Yeah, definitely. I think we all have learned a lesson about actually done to appreciate what we had, and then when it comes back to normal, we will do it more often for sure. That's something that I said I'll definitely do. I will go more to the beach, go outside. I would never complain that the sun is too hot and the wind is blowing. I would just say yes.
No, it is. Oh, no, it is really. No, definitely.
Okay, let's go to the next question. Tell us what you think it's a good time for people to buy a house. Why do you think it's a good time at the moment? Because, you know, everybody's scared because of the lockdown and the insecurities we have about the future. But you have good news for us about buying a house and the affordability of that.
Yeah, so obviously the rate is definitely the big factor that can be considered. And, you know, clients that probably couldn't get into the market before now have an opportunity to do so. I actually wanted to give you a practical example of how much easier and cheaper it is and more affordable. So let's say, for example, if you're wanting to apply for a 2 million rand bond, on the rates that we had it, on 9.75, you would have to pay about 18,970. But with the new rate cuts on 7.25, it's now makes it 15,807. So you already have 3,000 rand that you're saving. And, you know, a property is an investment from the start, and you need a home. So even though there's a lot of uncertainty in life, there's a lot of positive aspects. And I think if we can just move forward and have a vision where we try and just move on with life. You know, COVID is here, it's a reality, but if we can just push through the negativity and just try and create your own goals and planning and views for your own family, I think you'll be more confident to actually try and do the home buyer's certificate and go into all the tools that we'll obviously discuss for the interview. But, you know, the rate's been the lowest since for 47 years. It's the lowest. There's a lot of pressure on the reserve banks to keep the rates low, so that it will obviously just increase the appetite for spending and purchasing properties, which is really great. Kay Geldenhuys, that's often on a lot of the webinars that I've been listening to. She's one of our top managers at Uber, and she says that it looks like the rate will remain consistently low next year, and we'll only really see an increase in 2022. So for about a year and a half, you guaranteed the lowest rate. So if you're just trying to get into the market to even just resell your property as an investment for a profit, I would really think that today is the time to actually move into that commitment, because it's easier, there are tools. And if you're a client that hasn't really been affected by COVID, obviously everyone has, but you're still earning an income, it's still showing. I think it's definitely an opportunity for you to try and see what's out there in the market. And with your experience, Eloise, I mean, you really shop around for the best deal. You guys do a lot of marketing research for your clients. So they're definitely in the best hands in the industry. So they will definitely get the best deal going forward. So,
yeah, that's
and again,
yeah,
a lot of pressure on the Reserve Bank.
Yeah, and I think the one thing people must always remember that in South Africa, real estate has always been a growing investment, even if it's a slow investment over a period of time. But if you think about it, the money you pay for rent is going to a black hole. It's somewhere that you stay, but you never get that back. It just disappears into that black hole and somebody else's investment. Where a house, even if you live there for 3 years and you resell it, you still have an investment you're getting back. And I always say to people are scared of making that commitment, but that's the good thing about you guys, I think, is you would not give a bond, or the bank would not give a bond to somebody that's not, in these days, that they can afford it. There's no way. It's like in the past, I know there's a lot of people that's scared of doing this, going through this process because they're scared that they're not going to be able to afford it, or they get in trouble later. They're so strict, the rules, that bank will not give you a loan if you not really can afford it. So that fear can be taken away. I think people are still scared, can they afford it? And we'll discuss a bit later how people can go about it to make sure, you know, best practices in their invest or in their money to make sure that they have a good credit score. But yeah, I absolutely agree. I think investment in property is your safest bet in the long term to make your money back and don't lose it in the end. Especially in the North Coast, we are the fast growing property industry in South Africa.
Definitely.
It's definitely a best investment. Okay, let me go to the next one.
Just that. Sorry, just to get back to what you were saying, at the end of the day, if you are living for your future, when you actually invest in a property, you're at least paying off towards something in your future. To have a paid up property would be great by the time you decide to retire. So you have to start somewhere. And, you know, with the new rate cuts, I definitely think it's easier to get into it. But also, as a level of comfort, the banks do load an interest rate of prime +2 when they calculate affordability. So when to anticipate any rate increases. So when they calculate your affordability, they do make sure that you are good and safe and would be comfortable should there be rate rate increases going forward. So even if you approve now on the lowest rate, they have taken into account, should there be any rate increases, you would be safe and be able to afford going forward.
Okay,
so
great. That's good to know that people don't, because I think people have this idea in their head, okay, it's going to be low now, but what happens in 2 years' time? Then I can't afford it. So the banks make that provision for them. That's excellent to know.
Yes, they do. They definitely
okay, so what, next question is, what is your advice to somebody that is thinking about buying but doesn't know how to start the process? You know, to get the affordability, can they afford it? What should they do?
Okay. So my golden rule is, even before you tap into all the tools, is that you as a household sit together and decide on what budget you are prepared to spend on a house. Because that would just make the idea of home ownership a lot easier. There are great tools out there that we have as a company that will make the whole process easier. You know, just yesterday we launched our new homeowners buyer's guide. It's got all the do's, what to anticipate, what to expect. So it's from step one to the final step. I've also created a first-time home buyer's guide, a video. So if you like watching videos, rather, it's also very interesting, very easy to understand. So it's perfect. And then, so start with your budget that you've decided, and then you go on to the pre-qualification certificate. I have a link which I can send to your clients. Or Seeff also has their own link which they can also send to the clients. And then that will give you an indication of what your scoring is. If your scoring is above 600, you know, that's the credit scoring you're rating, you should then qualify for a property. If it's a little bit lower, or you feel you want an excellent credit score, you can just ensure there's a few things that you can do to try and increase your scoring, that when you are ready to purchase the property, that you're absolutely ready. In the home buyer's guide that we've given, it also explains on the costs. So you need to make a provision for the bond fees, the attorney fees. There are products available where you can borrow costs if you're a first-time home buyer. It also explains it to you in depth. So, but the main thing is, start on a budget. Consider what monies you have towards this investment. Feel comfortable in what your repayments will be monthly. And then the next step would be do the pre-qualification certificate. Once that's given, connect to a real estate agent like Eloise, where she will then find you your dream home. And then you can obviously apply for the bond application, where we can do on one electronic link that I can send to you. You do it online. It sends through all the information to me, and we'll submit simultaneously to all the banks on your behalf at no fee to you. So there are a lot of tools out there. Ooba's also got an app where you can calculate what your bond fees and your transfer fees are. So you're already ready when you go into the next step. And there's no surprises that by the time you get your bond approved and it goes to an attorney, that you now all of a sudden have all these wonderful fees that you didn't know about. So there's great tools out there on the internet. Ooba's also got a website where there's a lot of questionnaires and just information that we put together on the research platforms where clients have actually asked similar questions and it's answered. So there's a lot of information out there. So knowledge is obviously the main important thing that you need to get now, but the tools are available there. And again, we are available if you need to contact us. We've got cell phones, on email, Facebook. So it's definitely just a phone call away to assist you.
Okay, that's great. I'm gonna, I'll do it with the links that you just talked about. I will add it onto this video down below. So if you're now listening to that and you want to go, after this video, go down, you'll see the links to that, and they can click on that and take it from there. Okay, perfect. I love that question. It was a good one. Okay, I want to talk about something that I think people don't know. We talk about the full, about 20 to 30 years payment. We chatted briefly the other day about it, that you can pay a house off in 20 years or 30 years. Can you explain that for me, please?
So you can. Basically, a lot of the clients that have a strict budget and they're wanting to spend a little bit less on their repayment monthly, they're happy to opt for the 30-year terms. What that will allow you is to qualify for a little bit more. So let's say we have an application and you just may be a little bit short on affordability. We can increase it to 30 years But doing it over 30 years, just know upfront you're going to pay more interest. So that's the difference between the 20 years and the 30 years. I did do a calculation between the difference. So again, on my 2 million rand property, if you do it over 20 years, you're going to pay 15,807 on the new rate. If you do it over 30 years, you're going to pay 13,643. So you can see there's a remarkable difference. So for those that have a tight budget, I would say go for it. For those that are anticipating that they're going to probably just keep the property for 3 years, you can do it over 30 years because the bank's recalculated. So there's no real loss actually when you do eventually sell the property. But if your aim is to pay off the property, try and pay a little bit more into your bond so that it just reduces the full term of the bond, and then you save on that interest. So it is a tool that's available more for affordability, and if you want to pay a lower premium on your bond installment. So it is there and it is available.
So can you, if you have a 30-year bond payment, can you pay into that bond, say, and this year you start, now you want to have this home, but you only have that limited money that you can spend, but next year, 2021, you doing better and you're starting paying off quicker. Will the bank recalculate how long it takes to pay off your house if you pay 1,000 rand extra a month probably onto your bond? So they will do that automatically, or do you have to notify them for doing that?
No.
Okay.
Whatever amount you pay into the bank more, it already affects your interest. So it reduces your interest. On the tools that I discussed earlier on, like the ooba app, for example, it actually gives you the interest saving if you put in certain amounts. So you can say, for example, from the start, I'm going to pay 500 rand extra into my bond every month. You will then see as you go into the bond term, that your loan term is no longer 20 years because you've paid 500 rand more. It's now reducing, it's now all of a sudden 15 years. So what will happen is your term will just shorten as you pay more into your bond. If you have an access bond, anything above your monthly installment, you will then be able to have access to. So for example, Standard Bank's got a nice product. It's a tiered offering. So if you now have a lump sum of money that you can put into your bond, it will automatically recalculate your repayment and your interest, and you would the very next month pay on the lowered rate, whereas you have to give notice with the other banks. But if you as a client, you're not really interested in checking where the interest is, but you just want to pay more into your bond, you are then ultimately paying off your bond quicker, and that you will see when you start seeing the interest is going less and less and less. So it's really, really a great exercise to do. Any excess that you have, rather pay it into your bond, because it just reduces your interest. And then any savings that you have, pump that into your bond, because there is an access facility available on your bond. It's safe. You might not be tempted to maybe draw it out of the account because you know that you're saving on the interest. If you now love shopping, for example, and you maybe not that disciplined, so keep it in your bond, get the interest reduced. But remember, the minute you sell their property, it's then going to recalculate for that date, and then it will change the whole interest structure in any case.
Okay, great. So that's a good tip for somebody that's thinking about saving money and paying off the house quicker. I think we underestimate if you just spend a little bit more every month into that, how quick you can pay it off. Okay, yes. The next question is, okay, we discussed the credit scores, but I would wonder if you want to explain the pitfalls people have to look out for getting a good credit score to be able to be approved for a bond.
Yeah, just for an example, like most of us don't actually know it, but let's say you have to pay your Edgar's account by the 4th of every month, and you've gone in and you've only paid it on the 5th. On your credit score, on your credit bureau, is going to pick up as 30 days late. But in all reality, you've actually only paid it 1 day late. So be very, very dedicated to making sure that all your retail accounts are paid on time, because that affects your scoring. Obviously, when you're going into doing your budgeting, look, is there any unsecured loans that you can get rid of, any extra credit cards or loans that you might have that you're able to close? Rather do it, because even if you have a credit card and it's got a a limit of 20,000, but you never use it, the bank uses all of that exposure because at any time you can draw from your credit card. So the rule of thumb here is to ensure that your accounts are paid on time, to ensure that you've settled any of your other accounts, and just to make sure that you've got a good credit record above 600, because then we have the ability to negotiate the best rate on your behalf, because the bank looks at all of that. You know, the ITC track record is what they use to see how you pay off your loans and your accounts. So that's why the scoring is so important. And it's never really top of mind. For example, at Eggers, for the last 2 months, you weren't able to pay it on your app. I don't know if anyone has had that experience. So you actually have to physically go into Eggers to pay it now because they've had system issues. And all those little things actually affect you when buying a property. So let's say, for example, you know you've had a few issues and hiccups, then rather diarize the certificate for the next 3 months. Then rather fix what you can now, and then say, okay, well, in the next 3 months, I'm going to now see what my credit score is. The pre-qualification certificate that we have for our clients, it doesn't leave a footprint, so it doesn't affect your scoring, but it does give you a credit score amount. So then it would say it's either excellent or fair or poor, and there you would more or less be able to gauge, oh, is this now the opportune time for me to actually submit an application for the best deal? When you're wanting a 100% loan, you need a credit score of an excellent credit score. And as it reduces, then your chances for a 90% loan is increased, or an 80% loan. So that's really how they gauge affordability and scoring. And so it's important that just those few things, if you can just sort it out going forward, and then you're ready. If you know of any accounts or judgments or issues, not the end of the world, get hold of an attorney to try and help you get a judgment rescinded. Try and get it sorted out. Within a few months, you can then be ready to purchasing a bond application.
So did they look at the last 3 months, or did they go further back than that?
Look, in all reality, they do use like a 12-month track record, but you can increase your scoring because your score is actually updated every month at a certain time. So obviously, if you've had now a very, very poor track record, it might take you a little bit longer to get a better. But if it's something small, like you missed a payment, or now even now with this COVID, I mean, in all reality, a lot of people have faced financial crises, and a lot of them might want to get into the market and they're not really feeling that they're ready for it. Use the tool that we have a look at your scoring, see where you can make arrangements, see what you can do to try and rectify your scoring. So you might not be ready to buy now, but you can buy maybe in the next 6 months. The banks look at 3 months bank statements. So let's say, and again, this is the nice tool of going to all the banks. They only ask for 3 months bank statement. So if you are a Standard Bank client, so obviously they'll have your portfolio and they'll be able to see where you've had a problem in 6 months ago, but ABSA is not going to really pick up that you've had a problem 3 months ago. So now we submit to ABSA and they can move on. Oh, there's no debit orders that have gone back. He's got a good track record. His ITC score looks good. You see, those type of things that clients don't really know. So don't feel it's the end of the world now. Rather just try and set it as a goal, rectify the small issues, and then go again. Also, very interesting, if you've had a business and you couldn't trade, give the bond originator just the information of what happened, give her information on a motivation for sustainability, that she can put it together in a motivation going forward. So, because the reality is everyone has gone through a shift, and if we have a good explanation and it makes sense, you know, the banks are open to listening. You know, we've pushed through a few deals now where it's been contractors and it's been difficult to try and obtain a loan, but there's been good contracts in place that we could prove, and just give them some level of comfort that this client is able to afford the bond repayment going forward. So there's a few things that you can do, but at the start is the credit score. That is your go-to. Have a look at your affordability. This is how the bank looks at it. They look at 30% of your income, but you can calculate it yourself. If you want to spend 20,000 a month on a property, make sure after all your expenses are paid, do you have 25,000 Rand available for example, because that would be the rates and the water, all the other added expenses, so that you're comfortable when purchasing a property. So you can already do the maths for yourself. And people are very educated out there. And because there's a lot of tools and everything, it's an online world, they already basically have the information at hand. So your buyer is normally quite prepared when coming into the market. But it is a little bit challenging when it comes to the credit score, because consumers don't really always know to pick up the pieces if something had gone wrong.
Yeah, it's good to know that there is ways to do it and ways to handle it. And I think sometimes people just give up because they think, okay, well, I've had a bad credit score before, or I have a bad rep, and now it's the end. So it's good to know that you can do some things to make it better. Suggestion is to if you have accounts like with ICAs, make you can set some payments going down before the 29th rather than the 30th if there's something goes wrong, to make it sure happen. Okay, perfect. Let's go to the last question is, what is the difference between going to the bank for a loan and to you? Is there any difference or not really?
No, there's no difference. You know, Bond Origination has been around for many, many years. And, you know, we just create a home, like a complete interest rate comparable service. You know, if you go to the bank yourself, you're not able to negotiate a better deal because you don't have another comparable deal. So what the clients feel is, you know, their private bankers known them for many years. They've got a great track record with the private bankers. You know, some of the private bankers you might not even have contact with, or it's difficult to get hold of that person. But with a bond originator, we're already working with bank managers and liaisons in the banks that are above the private bankers. So when we're fighting your deal, we're bypassing that and we're going directly to credit, doing motivations. And we've actually got a team of experts at the banks telling us, giving us, you know, tools and tips on motivations on how to package the deal. And a lot of your private bankers in the years have now actually joined to be bond originators, because it's just such an easier way to get the best deal for the clients. And Uber's whole perspective is to try and get the client the best home loan experience. We want to increase our vision out there. We want people to know that our heart is to get them the absolute best deal. So if you feel that you're going to get a better deal with the bank yourself, you're not really going to, because they're going to give you one interest rate. Whereas the banks are very, very, very competitive. It's a business. They want to retain market share. They want to grow their books. So a lot of the banks we've seen, they've been very hungry and have fought a big fight to try and retain clients before. And they've actually received even better deals, you know. So there's no cost, there's no loss. It doesn't go through a different system. It goes really to that credit analyst that needs to look at it. But the added advantage is, if something goes wrong, we are there to be the net and try and motivate the deal to try and get it through. Whereas if you're going to just do it with a private banker, all the banks are so different, they have different loan to values, you might just not get a deal in the end. You know, for example, F&B has really changed. They've got so many restrictions. If you're self-employed, you're only going to get an 80% loan, but there's still better offerings with the other banks. But if you just go to F&B, you're not going to know that, and you might just lose the opportunity for this property. So there's definitely a great gain in it. And most of the consultants are very, very experienced, very well trained. You know, we get updates from the banks all the time. And again, there's no cost to you. So you don't lose anything in the deal. You actually only gain. So that's the added advantage.
I've experienced that even when we bought our first house, it wasn't the bank that we banked with that actually gave us the loan. They would just give us the highest premium that there's possible. And in your mind, you would think, I banked with you for 25 years. Why wouldn't you give me the best interest rate possible so that I can stay with you? And it was just a mind-boggling thing for me, because you think loyalty does mean something, but apparently in the bank system it's not. It's the best deal that they can offer. So it's good to know people need to have more, like anything else. If you want to have a handyman, you need to have at least 5 quotes before you can make a decision. You can't just go to one guy and think that's the best quote you're going to get, the best work we done. So that's a good advice. I think people are going to have. I just want to see if I missed a question here.
No, that's fine.
We actually, yeah.
sorry, Eloise, on that point again, you know, when you're looking for insurance, you shop around to a lot of places to try and get the best deal. Now, obviously, with the greatest investment, why don't you want to actually try and get the best deal? So
Yes.
that's why we're there, you know, to try and assist the clients as much as possible.
That's definitely, I think it's a good, and I think that people understand now a lot more what you do and how you can help them. I think we asked all the questions we had. If you guys want to use Cindy's services, I'll have the information downstairs, the email address and a cell phone number, so you can contact her directly if you need to, or I'll put the website for ooba website on there. You can go there, check out the tools that they have that they can help you with. If you have any questions, you can always email me or questions or phone me, and I can help you with your direction of where you want to go. But thank you very much, Cindy. I appreciate your time, and I'm looking forward that we can start business full swing again.
Yes, that would be wonderful. Thank you so much for the opportunity and just the platform to try and explain what we do. Really, really appreciate it and value your support. Thank you so much.
Sure. Have a nice one. Bye.